it, you just want to go over to your trading view, and on the indicator button, something like this, you want to hit it and then search for Asian range. Okay, Asian range. So when we type in Asian in here, it should pretty much pop up something like this. As you can see, a lot of them: Asian range and Q zones, Asian range by Nico 948. This is the one we are using. Okay, I think this one looks nice as well, but I'm not using it. I have an idea of what this would be. This is something that is nice, but anyways, this is one we need, Asian range. Let me see what this looks like anyways. So you want to activate the Asian range by Nico 948. What it does is it will paint the Asian range for you on a daily. I think I'm going to use this one because of the way it looks, this rectangle. So it will mark out the lowest area in the Asian range to the highest range for you. Okay, so like I said, it's going to be painting the Asian range for you. What can we do with the Asian range? What happens is the Asian range, this is the Chinese market. It is tradable, but one thing that is lovable about this market is that it creates direction for the London market. Okay, so now when you take a look at this, majority of the time when the market breaks the high of the Asian range, let's quickly go to a board. Let's create a board and let's work with that. So let's say this is the Asian range. This is the Asian range that was just created. Okay, and the market is actually moving on the inside. What happens is when the market actually breaks from the high of the Asian range, majority of the time it will come back, retest that Asian range, and it's going to continue pushing up for the rest of the day. Okay, so maybe you might not be able to catch all of its daily move, but at the very least you always have this one trade here that you can always take, a buy that is very easy to catch, which is the retest of the Asian range and the first move distribution to the upside. Okay, so one thing you want to understand is only trade when the market clearly breaks the Asian range, and then you can look for a retest of the Asian range, or look for an entry that is created on any of the liquidity zones around that area. So anyways, let's get into the chart and actually do something about this. So quick one, this was today's Asian range, and as you can see what happened, immediately price broke the top of the Asian range just about here. You see the price came back into it, retested it, and it was a bullish move. Now imagine you were able to just catch this here. You would have entered at this candle here, stop loss in here, and mind you, whenever we enter, we're always targeting 3 times our risk. So for this trade we would be targeting roughly 3 times our risk. So our TP will be just here, and you see we would have been out of this trade very fast. Okay, so this is a very easy scalping strategy that anybody here can implement. Is very easy to use and would always have put money in your pocket. You see this is 14 pips stop loss with a 43 pips target. You would have just gotten out with this. This would have been TP. Mind you, we are risking 3 to get 1. So what we're going to do quickly is we're going to scan through 10 trades, and we're going to keep how many we win and how many we lose. So this is our first trade. We won the we just won the trade. This is Q zone, this is London Q zone, and this is New York Q zone. That's lovely anyways. So moving on, this is another day, and we're going to be discussing Q zones as well soon. These are Q zones regularly. The London Q zone happens just after Asian range. So now this is another day. I don't know why, but my trading view is just lagging. So this is another day. As you can see, this is the highest point of the Asian range, and this is the lowest point of the Asian range. For this particular day, we only tapped the top part, the topmost part, before the market actually started moving. See that we took, but we didn't break the high. Remember I said always wait for a clear break. So in here you see we didn't break clearly, so we wouldn't be taking any trades there. So we'll continue moving back. So that means on this particular day you will have no trades to take. Moving on, let's scout for some other day. This is our next day. As you can see, we took out the top just in here. Let me drop this here. So this is the highest point. You see, we took out the high, we came back into it, we retested it, and you would have entered a buy, maybe just at this first one. This was the first retest, so you would have entered a buy just beneath the candle. You don't have to keep your stop loss very far away, and we want to target 3 times our risk. 3 times our risk. That will be just this. That will be just this. And you see that? So we have just gotten out of this one with a very nice one. So another thing you can do is, if you want to be rigid, very rigid on how you put your turns, you can always do 20 pips of stop. So that will be 2,000 in here, and then target always 6,000. This is another option that you can go for. So we're going to just set this up as a template, and let's see how well this works out. 20 pips stop loss, 60 pips TP. So second trade with a winner. Let's check out the next one. So this is the next day. This is the highest point of the Asian range. This is the lowest point of the Asian range, and as you can see, just in and around here, this was where we broke the Asian range, right? Let's drop a line there. Let's drop a line. Horizontal re. That's the name of the line I'm dropping. A horizontal re. So you see, we broke it, we retested, and this was a push up. You may not have caught this because it's a 5 minutes time frame, but at the most you may have taken this one, stop loss beneath here, and you'll be tagged out. But let's still put it and put 20 pips stop loss. So we're going to do 20 pips. I know it will be taken out, but we're still going to put it. So this would have been a loss if we did 20 pips stop loss and 60 pips targets. We would have been tagged out on this one before market goes in our direction. So it would have taken our stop loss, right? It would have taken our stop loss, but overall it would have gone in our direction. So that's 2 wins and 1 loss. So if we were risking 1%, we've made 6% now and lost 1%. So that means we are up 5%. Now on this one as well, this is the high, this is the lowest point, this is the highest point. So whichever side is broken, if it is the lowest point, we look for sell. If it is the highest point, we look for buys. So in here, we broke and we retest. Maybe you might not have caught this, but most of all, you would catch this one. So a buy in here, stop loss beneath the low. In this case, you wouldn't just use 20 pips, but if you use 20 pips, it's all good as well, because you're entering at the close. So you have your stop loss will be just there, and you'll be targeting 30 pips. You'll be targeting 30 pips, of which we see from this the day it did more than that, did about 100 pips. So you would have been up a nice amount of profits on this one as well. So that one gave us, this was a running profit, so we made actually 5R on this. So we made 5% on that one instead of 3% that we always target every day. So we are up 10% now. So we have overall, we've made 4 wins, right? 3 wins, 1 3%, 1 loss, and another win now that actually came with a runner. So now moving on to the next day, we see that the high was broken again. So you just want to see whichever part is broken, you look for a retest. In here, we didn't really get a retest, but we got a higher low somewhere here. We got a higher low. You will always get a higher low. So we take our higher low, buy the stop loss at the low. And sure, let's just say 20 pips stop loss. That was our target. 20 pips target. And as you can see, this was another runner. This was a runner. Maybe you wouldn't have caught everything, but at the very least, you would have caught 100 pips out of this move. So this is another 5R, 15% done again. Another 5% done. So now we have 15%. That's our 5th trade. We are up 15% in 5 trades. This is something simple anybody can use. Something simple anybody can use. Now on this one, this is the highest point, and this is the lowest point. And as you can see, at the end of this particular day, the market did not take out any direction. So that means we will not take any trade. So we head over to the next day to see what happens. We head over to the next day, to the next day, to the next day. Okay, now to the next day, this is our highest point, and this is our lowest point. So we see we kind of wicked the low here, but it wasn't a clear break. We entered back inside. There was no entry, although if you were able to catch this, you should have been able to get your profit target, but we didn't get any of this. Where we had a clear break was down here, so you would have caught your sell here, just in this blue candle. Stop loss at the top, target 3:1, right? Target is 3:1, and you see we would have still hit TP. So now we're up 18%. We're up 18%. We're up 18%. So we keep moving. We keep moving. Another day. This is our high again. And so this is our high. Clear break here. We would have buy here. We buy here. Stop. I'm being as real as I possibly can. TP will be 3:1, which, as you can see, stop loss taken. So 2 losses and 5 wins now. 2 losses, 5 wins, and we are up 14%. So see how simple it is. You can just continue this. We have done 7 trade simulations now. Let's look at this one. This is the high. This is the high. If you took that buy, this would have been a loss as well. So 3 losses and 5 wins. So but we are still up 14%, 15% now. We're up 15%. So mind you, this is just for confluence. You shouldn't just trade with only this one. This is a confluence, so it's what you look at when you are looking for trades. So in here we had this. You would have taken a buy here. This would have been a loss as well. So it's 13% now. We've lost another money, 13%. And for our last trade, this one is the last trade. This one we see the low was broken. In this case, the low was broken. We would have gotten our, after this break, this was our re-entry. So we would have sold here, and lovely, this is a lovely one because this is a runner, and 20 pips stop loss. And you see this was a runner. This one did 150 pips. This did more than 150 pips. Well, I believe in this trade, whoever took it would be able to catch just 150. So that would be a very nice 100. A very nice how many hours? 7 hours, 7%, actually 7.5. So you will be up 20%. So with that, you will be up 20% after 10 trades. It's literally like the next best thing you can have. Mind you, this is fundamentals. You can use this to find direction of the market, but this should not be the only thing you look for when you are looking for a trade. Okay, so yeah, that's basically it. We just discussed Asian range, and I hope you learned something, and I just hope this would help you in your trading journey and make you a better trader overall. Okay guys, so do try this out and ask questions. Okay, see you in the next video.